I suppose just welcome to anyone who joined there between the end of the algo trading class and the start of the talk. This is the first speaker series event now. We've done the semester, the third of the year, with Shane from Aikido Finance, which are like a quantitative strategy and kind of algorithmic trading platform for retail investors, for those who don't know. As usual, like if you've got any questions as we're going through, stick them into the chat and we'll address them. So maybe to kick things off, Shane, do you want to kind of just give a bio about yourself and about the company?
Yeah, for sure. So Aikido is the second quant startup I've built and fourth startup I've worked with and for. Obviously, this is my baby. We've been going at it now a year and a half or so, though the idea probably about over 2 years ago. Since inception. So yeah, we successfully closed the seed round there a few months ago, launched the product to the public a few months ago, and the whole thesis of Aikido is ultimately to bring algo trading to everybody, but without the need for coding experience, loads of financial knowledge, loads of cash. It's a subscription SaaS platform, so you basically come in, connect your broker, pick a strategy, build a portfolio, and all the trades just automatically sent. And really, I've been a quant for, I've been every type of investor under the sun since I was 17 years old, but turned quant several years ago and was sort of manually following along myself. And it was taking a really long time. So using like a rules-based approach to build a portfolio, doing all the rebalancing myself. And I really just kind of saw this huge gap, right, to do exactly what we're doing. So yeah, it's been a wild ride. We've got 7 people in the company now, fully remote, everybody is. So as you saw just before, I live in the old camper van full time, which is very pretty, in Chamonix. So we got guys then in Spain, UK, all around the place. So we generally like to keep things pretty fun, but of course it's pretty fast paced being a startup.
Yeah, cool. So I suppose on the background then for quantitative investing and algo trading, would you like to kind of tell us what separates it from traditional methods of investing that you'd hear about?
Yeah. So I said I try it, and I've done lots of different types of investing, and that's very true. So I mean, I started off when I was 17 Forex trading, properly into the very worst part of all things finance, and lost a little bit of cash there, but learned lots of lessons. And quickly after sort of burning a bit of cash, I just hopped in and educated myself massively straight away, and quickly found myself into the world of value investing. So, reading Ben Graham, reading lots of Buffett, all the boys. So I went deep down the path then from value investing into really just becoming a general fundamental and good investor, or what I thought as being a good investor. And that means doing lots of due diligence on companies. So you spend a lot of time going through financial statements, spend a lot of time listening on earnings calls. You're going to be looking at what analysts are saying. You're going to be trying to deal with your own cognitive biases. And in general, spending a huge amount of time researching companies if you're going to do it right, to manage your own portfolio. And of course, the first part is, picking those 15 to 25 stocks that are going to make up your portfolio. And you've got to research, if you're going to do it correctly, a huge amount of companies, and be willing then to realize that some of the research stock that you're going to find don't fit the bill, and you have to discard them. So you're going to be going through really hundreds of companies to try and build this fundamental portfolio. And then, of course, to keep it up to date, you got to rebalance it, be it every month or every 3 months or every year, whatever your period is. But that's coming back and making sure that it's still in line with your investing thesis, if you're fundamentally investing correctly, right? So that you have the correct weighting of the portfolio, you have the right factor breakdown, you have the right industry and country exposure. So lots of moving parts. And in general, it takes a lot of time, and it can be a very skilled thing. But really, there's a lot of studies come out now that, basically nobody can stock pick. It's an incredibly hard thing to do. More people are realizing this. And so what are most people doing? Well, most people are flooding into ETFs, of course, which I did before becoming a quant, just giving up on that whole thing. When you look at the long-term stats, and I mean, it is like, 95% of people are going to underperform if they stock pick the market, right? So it's super hard. So So that's where in contrast, that's the fundamental side. It's a lot of fun researching those companies, but the quant side makes it a lot easier, in my opinion. Despite the fact that algorithmic trading and quantitative investing are very big words, to me they're actually like simplicity and structure, right? And so what a quant does, of course, is they use computers to pick stocks for them. So they have an algorithm, a strategy, which they run, and it spits out some stocks for them. And then that is what they use to build a portfolio. And again, the whole idea of keeping the portfolio up to date and rebalancing is all sort of managed by the algorithm. So it really just simplifies the process. And these strategies, in the whole world of quant, there's many layers to it as well. It goes from the very, very simple side of things and all the way up to super complex. So of course, on the very simple side, really, you can be a quant by just using a stock screener. Like you can find one on Aikido or even on FinViz, just a standard stock screener, and that can be the universe of stocks that you choose. So let's say you wanted to search for value stocks. You might look at price to sales ratio less than 1, price to whatever, PE less than 10, something like that. And then you have a screen of stocks that fit the bill. And then you can still use your fundamental skills and research that universe. That's like base level quant. And then after that, it comes to completely trusting an algorithm. You might use the screener and put in a more complex strategy into the screener. It spits out the stocks and you just build a portfolio with 15 of them, right? That's kind of what Aikido does. Obviously, there's a bit more complexity to it than that. But then there's layers on top of this. So with that kind of screening one, maybe you just use a rebalance period of every month or so. But you can then go into intraday trading, right? Into signal-based trading, whereby let's say you're trading in and out of stocks throughout the month, right? 50-day crosses the 100-day moving average. You might buy Apple when that happens, for an example. That gets dangerous. You have to be very, very structured as soon as you start doing intraday trading, because you can actually mess things up badly because of transaction costs, forex costs, and just messing things up because you have more moving parts. But this is what, of course, the big funds do. And then you have, of course, all the way up to the top, you've got the likes of machine learning and AI, which is really exciting. And then, of course, HFT, high frequency trading, which retail investors just don't do. And that's front running and all sorts of crazy mechanics that the top quant firms do.
Yeah, so you kind of touched on it there, I suppose, in terms of that. For a retail investor looking to get into quant trading, I suppose if they were doing traditional kind of stock picking, and they wanted to be successful, and you're pouring hours into looking through financial statements and every sort of information you get on a company, whereas with kind of quant strategies, it's almost more suited to the casual investor, I suppose, in that sense, because it's efficient. You're cutting away all the kind of the fluff and you're just getting straight to the numbers.
Seriously, I mean, it's easier, and you're using a strategy that the backtested performance of it. You know why you're doing everything. I can say every single reason to a decimal point why I'm choosing a stock, and it's so much easier. Like, really, I'm just lazy, right?
Yeah, it's funny because that's probably a contrast to what's traditionally associated with it, where it's a long, convoluted, complicated method of investing rather than just simply reading up on a company and picking that stock. In terms of a background to kind of quants and kind of trading as well. So how prevalent would kind of algorithmic and quantitative solutions be in the modern financial markets? Just for those who wouldn't know, what would you say to that?
So absolutely massive, and only going more that direction. So right now, 6 of the top 10 performing hedge funds are quant. I'm sure lots of you guys have heard of Renaissance, who they have this fund called Medallion Fund, which has averaged 66% per year over the past 30 years from 1998 to 2018. So crazy returns. But on a typical trading day, on any given trading day, 90% of trades are now made by computers. And the whole realm of factor investing, which is sort of my area. This is like rules-based quantitative investing, not like high frequency algos. BlackRock estimate that industry to grow to 3.4 trillion this year. So there's basically huge growth and like guaranteed like every year it's exponential growth, right? And people are knowing this. The first move is this move to indexes. This whole world of quant is still pretty underground, to tell you the truth. The tools aren't out there. There's me and like a handful of like Aikido, pardon me, and a handful of other tools, and it's still very, very small. So yeah, growing very fast.
And yeah, so how accessible kind of would successful quant strategies then be to just the average Joe?
Yeah, so I would say the answer to that is varying. And it depends on two things. One, the algo or strategy that you're using, and two, the type of investor that you are. If you are using a long-term algo or a long-term quant strategy, like ones we would have, I suppose, in Aikido, and you're a long-term investor, well, that's a good mix, because you can look back and backtest over 20 years to 40 years if you have FactSet database, and you can see what the return per year has been, on average, and you're looking at strategies of 15% upwards, and that's what you're kind of looking for. When you become a quant, you're not looking to match the mark and get that 10. You're looking for the magic 15%, right? That's like the baseline percentage if you want to go into this, right? And you can achieve that for sure over the long term if you're a long-term investor with a long-term quant strategy. If you are a trader, you can get massive returns, but it's very dangerous and you can explode. And of course, the famous stat that 95% of traders blow up because they don't have that sort of long-term mindset, right? So you can make a lot of money in a short term with very, very high risk by using these algos. I mean, for example, all you have to do is go into subreddit algo trading, or go to quantconnect.com and see any of the algos that are up there and check out the short-term returns on these, and they're massive, but there's just that higher risk. So
yeah, and then in terms of, you kind of spoke about how you'd be a big advocate for factor investing, and in terms of that rules-based approach, and I suppose this kind of topical at the moment is, how would you expect that to perform in kind of an economic downturn or a bear market compared to maybe other forms of investing?
Yeah, so depending on what factor you're exposed to, you're going to have different consequences. If you are exposed heavily to momentum factor, which is basically stocks that have gone up recently tend to continue going up, you're going to be hit pretty bad during bear. If you are perhaps exposed to more value, you might not get hit as bad, simply because you've already bought companies that are undervalued, and so therefore you're just not going to get hit as big. Similarly, quality might also be a factor that could protect you, but ultimately, there's other better techniques that you can use to protect yourself in a bear market. So there's certain techniques that you can do that are sort of a little bit more advanced, but one of them is very well known is use a trailing stop, use a stop loss, right? So probably on average, the best percentage to use there is a 20% trailing stop loss. What does that mean? That's an automated panic sell if the market drops. You put a 20% stop loss in all your positions. When they drop 20%, it auto sells out of them, right? And so it means that you're maxed out on how much you can lose. What's a good thing to pair that with? How do you choose when to get back in? Right, that's the problem. It's like, okay, I get stopped out for 20%, but when do I get back into that position? Like, I don't have to wait and time the market, because then I'm just not a quant. So a good thing to pair that with is there's something called trend following, where you're basically going to look at the underlying index and the momentum of that. So you're going to check out the momentum of the S&P 500. It's obviously a pretty solid index to check out, and you want to see that. And so if that's experiencing negative momentum, you're going to stay in cash, because it's basically considered like a bear market, right? As soon as that underlying index starts to go up, has started to have positive momentum by whatever metric you choose. It could be 1 month, 3 month momentum. It could be moving averages. It could be whatever. You're going to buy back into your positions. I don't want to go any too deep into that stuff because it's a little bit more technical. But the best thing that you can do really when you're choosing a strategy is you want to check out base rates and drawdowns historically. So when you're backtesting an algo, you're going to get all the information, depending on who you're backtesting with, of how it's done historically. And drawdown is one of the really big ones you want to check. That's what's the worst decline this has ever experienced. And you can see some algos there that are going to have like, 80 to 90% decline, and they could have amazing returns, but that is not okay. That you cannot choose an algo with that sort of decline. You're going to find the S&P 500 has a max decline of about 55%. So you don't want to be going any worse than that. 55% drawdown. Another good one to look at is, of course, the Sharpe ratio. That's your risk versus return. And you want to use, again, that's basically how volatile the algo is versus the return payoff, right? The Sharpe is probably the most important quant metric out there, right? It's the metric. But you're going to want a nice high Sharpe ratio there. Either you're getting paid for the risk that you're taking, or the strategy is just lower risk. So, choosing that little bit of a lower vol strategy, which is a factor in itself. But yeah, there's a few techniques you can use. So it's hard to sort of name them all.
So just kind of on that, like throughout the talk, you kind of like touched on a few things you offer. Like you offer the stock screener, obviously you mentioned, and then you talked about like the moving average strategy, those kind of like technical things. What kind of services and products do you offer that people can like use to build algorithms?
Yeah, so we're working on custom strategy at the moment. So basically we want to do a UI based, like a no code strategy builder. Right now we just have out of the box strategies offered on the site. But our designers, like we're basically just finishing up the designs now to do exactly that, which is really exciting because like there's basically no site. You need to know how to code, right, to do these things normally. So this would be like a drag and drop strategy builder. Not available just yet, a couple months down the line.
And just as a matter of interest, like what languages would you recommend using, or what languages do you use to build those kind of things?
Oh, so Python for sure. Python's the go-to language for quants. I mean, MATLAB is some of the big hedge funds, old school ones use that, but I mean, Python's just your go-to language for sure. So, yeah, I would say if you're interested in building these things yourself, check out Quant Connect. It's pretty cool because you can code everything in their online IDE. If you want to get a little bit more custom than that, you could check out MetaTrader, which you can download if you're interested in the coding side. Or there's even like open GitHub libraries that you can pull to, like QuantStart and a few other back testers that you can pull to check out. All of them, Python, basically. Or R. R is also another sort of common one too.
And with that, just in terms of like, it's hard to trade if you don't have data kind of thing. Like, how do you get most of your data just through like APIs and open source stuff, or do you work with companies?
No, we get our data from FactSet. So we have global data going back to 1980 with all delisted companies. And there's where, as they say, and pardon the French, but shit in, shit out. You need really good data to do it now. And that's about everything that I just said there, including FactSet, by the way, or including Quant Connect, should I say. They don't offer like a full suite of, you're going to lose a lot of nano cap and micro cap companies on that platform. So you're right. There's still big barriers. And obviously, again, we're trying to combat that. But there is still barriers to doing it properly. But one of the important things, if you are doing the whole back testing, is making sure that you have good data there and that you have some delisted companies. So companies that might not exist now, but existed in 2014, let's say, so that you're not getting these biases that sort of come in.
And have you noticed, like, I know you've only just gone through seed funding, so that the company obviously is still quite young, but have you noticed there's certain like demographics and people who go towards your products? So do people tend to have knowledge of coding? Or?
Yes. So we basically have two sides. We have people who just want a really easy way to build a portfolio and like quickly like create a portfolio in less than 5 minutes. But then you have the people who are much more quant inclined, and we're actually more leaning on that side now, a little bit anyway, like giving quant tooling, people who want that little bit more of an in-depth. In general, the age that we're kind of looking for is between 25 and 40. That seems to be general sort of demographic. Surprisingly, a lot of interest in Ireland, but of course it's really big in the States as well.
And like with that, kind of jumping back to the product idea, I know like you said you're offering those kind of like building block kind of algorithms where you can pick like small moving averages, RSI, MACD or whatnot. Are you going to kind of get more complicated, like intricate stuff like machine learning? Is that something you can offer as a product, or is that something you'd need to code yourself?
Yeah, so we do our own internal strategies with machine learning. It's not on the roadmap this year, having like AI strategies, but they're super exciting. Interestingly, when you talk about building strategy there, like everything you said, there is price, is price, and we're going to have a lot of technical indicators there. But like our take on this is very much long-term quantitative investing. So it's heavily fundamental weighted in these in our algos, with basically a little bit of technicals sprinkled on top.
So when you say like fundamentals, are you going to be tracking like ratios over time, or is there a better way to use kind of technical analysis and algorithms?
So the strategy, the algorithm is a screen ultimately, right, to build your portfolio, and the way we would choose the stocks that go into that screen would be heavily weighted towards fundamental metrics, like you said, ratios, and then some technical indicators in there too.
Okay.
Yeah, so I think the other kind of component to it that people might be interested in is kind of the life style and kind of the experience of working in kind of growing startup like that. So would you kind of just describe a bit maybe what your day-to-day is like and how you find kind of working and founding startups? Because I think it's a thing that probably a lot of college students are interested in.
Yeah.
As a different.
Well, I was in so I was in UCD as well a few years ago. So I did computer science there. So I'm a coder, but I don't code very much now. I go in and do a little bit of React, JavaScript, which is pretty like front end, like antithesis of what we're talking about here, if I need to. But most of my day as a startup CEO, early stage, is like very varied every single day. As CEO, you're lead marketer of the startup, and you do, for example, I was just like on Fiverr, like buying like random different growth hacking kind of things. Earlier in the day, then I was writing like blogs for our help desk to help people. Like we just launched crypto strategies today. So we have like all these broke crypto exchanges integrated now with Aikido that you can just like, again, automate that. So I was writing loads of help desk articles for that. I'm forming then earlier on in the day, again, I was forming a partnership with a business who I think is a good sort of mix with us. So my job is very mixed, but the guys, I try to keep them very streamlined on what they're working on. So we have our head quant, which is my co-founder, Connor. And we also have a quant advisor, a guy called Paul, who's worked as a professional quant / algo guy for over a decade. So Connor and him work really closely. Currently, we had been using Quant Connect to sort of do all of our strategy research and building them, but we're taking it all in-house now. So we are building the entire pipeline ourselves. Connor is doing that all the time, so he's really busy. Which you basically got three parts. You've got data cleaning, data cleansing, which is by far the most important part. Then you have signal generation / strategy research, and then the third part is backtesting. So he's working on all of that. The cleaning is a huge chunk of work right now. A lot of normalization, Windsorization, all sorts of stuff. Then we have Tom, who works on the back end, and then we've got some guys on the front end too. So there's a lot of mix. Being fully remote is super interesting. That was always the idea for us, and it has always been the case, except for the very start. We were accepted into a startup incubator like a year and a half ago in London. So we went and we built as quick as we could and launched an MVP in 3 months. So enclosed in like beta, enclosed access. And then after that 3 months, really, it was getting a lot of customer feedback, lots of interviews, lots of finding out what the problem was, and continuing to build really fast. And as we only launched to the public 4 months ago, right, along with the close of our round. So it's still pretty fresh. And I would say that the single biggest thing with the startup is this. You have to have this constant. There's a sense of urgency all the time, and everybody's having a lot of fun, but there's this constant sense of urgency because you are trying to make it before you blow up, right? We have investor funding, and we're revenue driving and everything now, but it's certainly go, and I'm sure everybody knows that. But when choosing to start a startup or like even join one, it's a big decision. More so starting one. You really have to think if you're like the kind of person who starting a startup is for. If you're not, easily stressed and and you're quite motivated, and you really believe you have this amazing idea, and you validated that idea, go for it. But for a lot of people, starting a startup is this romantic idea, kind of like living in a van, but it might not be for for everybody. And there's other options, even starting, for example, maybe a little side hustle, especially if there's lots of coders here or whatever, just working on your little project on the side, and then doing it without getting that investor funding, without like ramping it up to startup level, might be a better option for lots of people to still get that lovely feeling of like, I'm doing something cool on the side, but it's not startup level, but it's certainly super rewarding. And I think the main thing is just keeping, for me, like, I'm so massive into meditation, and it's really helped me, because it's it can be very stressful, and like, hands down, without a shadow of a doubt, it's been so important. And so just making sure that you're taking care of yourself, and not letting the stress get to you is going to be very important.
Yeah, and I think then you kind of touched on it with the stress thing. How difficult really was it making that kind of breakthrough from having, just an idea into kind of getting funding, and then you get the wheels kind of in motion on actually becoming a proper startup by definition, if that makes sense? And kind of, how did you find that process?
The hardest part was the fundraising, for sure. So we have 14 investors in total. We have 13 angels and one VC firm from the States, venture capital firm. And the nice thing with raising capital is it gets a little bit easier the more investors you get on, because there's that little bit of trust that you build, and also your product is maturing at the same time. But that was certainly the hardest part. I've learned a lot now about how to do that, and I'm going to be out raising again in less than 6 months, but I feel very confident now with it, of course, because I can prove lots of things that we've done, but also the whole process I have nailed down. And I mean, when you're a founder trying to raise, it's very, very important to give it your full attention. I tried to be PM and also dev, and also try to do marketing, and try to do a bunch of these things as well as fundraising, when I probably should have just like given it my full attention. And I think, I talked there about how I do lots of different things every day. And I do enjoy that, but I think there's also a real skill in single tasking and in monotasking. And it's a bit of a lost skill. People brag about their ability to multitask these days, but that's not what's important. You need to get stuck into deep work and get completely absorbed. But yeah, I'd say that the fundraising was certainly tricky. Yeah, that was the main hurdle, and honestly, it couldn't have gone any better. It's been all uphill. Like,
what's kind of like your strategy for fundraising then? Did you like find people that you thought might be interested in it, or people come to you, or how did you kind of go around getting people for seed funding?
Yeah, so maybe I'll talk about how I did it before, and then all the things that how I would do it now, right? Give you guys like basically the hacks for if you want to do this yourself, because there's really good things that you can do. So how I would have done it is, so I set up an automation tool. One of the things I did was set up an automation tool. There was this, so we were in a startup accelerator called New Chip. We're actually their European pinup now. I constantly get messages like every single day from people who want to join New Chip, and like, hey, we saw you in a presentation. Can we have 15 minutes of your time on a call today? I don't reply really, but they had this automation tool called Sophos, which is a link that it plugs into your LinkedIn, and it basically sends out to people who match this like angel investor kind of thing. It'll auto message them. So we raised a little bit from that, got a board member from that as well. We did HBAN, which is the Halo Business Angel Network in Ireland. So this is like a network of angel investors in Ireland who like to invest in startups. And normally they're B2B, business to business. We're B2C, business to customer or consumer. But we were very successful. And again, we were kind of HBAN's pin up in a little bit, and we actually we were the very first person to pitch in Dubai. We pitched in Singapore, which was rare enough as well for a startup, and then we pitched to their London cohort as well. So we did a lot with HBAN. And then after a little bit, you know, then I would look up Google lists of well-known angel investors or well-known you know, VC firms. Email them. I would have got reached out to as well. Once you start making a bit of noise, you start getting people contacting you, which is nice. And actually, that's the VC firm who joined us. They're a quant VC firm. They choose their stocks, or they choose their companies they invest in, their startups, quantitatively, which is really cool. So they very much got what we were all about. So, you know, there was a lot of variability in how I did it. I thought the automation tool with LinkedIn was excellent. And so if I was to go about doing it now, even since we started raising, you know, just on whatever, under 2 years ago, a lot has changed, and there's a lot of access now to lists of investors. So I have just thousands of names and emails and things like that of basically investors that you can get readily online if you're in the right communities, or even if you just Google them. It's like lists of investors in Ireland, lists of investors in the UK, and then you want to nail it down to a little bit more tech, but you have a lot of these lists. So the nice thing is that sort of I have that database there, and I also have a lot of investors who are already really warm. So when you're raising, you want to have a CRM, like basically a way to manage who you've reached out to, so that you know when you've reached out, and you don't want to just reach out once, right? They don't reply to you, get onto them 3 days later, and then get onto them another 3 days after that. Don't give up, because sometimes it's the third or fourth email that you'll get the response, and they'll finally meet with you. So you've got to keep track of that. So I use Notion to do that, but you can use there's lots of ways to do that. As well, that I would use a lot of automation tools now for this next round. So there's a very cool tool called Phantom Busters, crazy hacky tool. This thing has only popped up in the last 2 years. It's absolutely amazing. Basically like a scraper tool mixed with automation. So you can set up all these funnels. So for example, I could hook it up to my LinkedIn. It's like, hey, anybody who matches the title angel investor, you know, auto message them. But I can also do things like, let's say there's a Facebook group, which is angel investors Barcelona or whatever. I go into that Facebook group, scrape every single member off of that, set up an automation, then to auto Facebook message them. So as a techie, we have a little bit of an advantage because you can kind of use these abstract kind of tools and use automation to your advantage. So, and it's a great time to raise right now. You know, if you're going to do it, the iron bubble is strong. So it's a good time to get out there and raise, and especially, you know, in my area of fintech, it's very sexy. So there's plenty of cash flowing in there.
And with investors, and you mentioned even taking on a board member at the start there, when they come on, do they ever come on and like try and be really loud and like try and change the business at all, and use their vision instead of yours?
In general, angel investors won't. Angel investors are normally they can help certainly a lot, but they can't have much sway there. Of course, I'm sure there can be, you know, angel investors who do that. We haven't personally had that experience. We have great investors on board. However, people do say that more so with VC firms. Now, again, we're very lucky with the VC guys we have. They're super duper. They let us do our own thing, and they just trust that we're going to do it. But I have heard that there are VC firms who are very hands-on. So for example, some of them insist on having a board seat if they're going to invest, so that they can have much more direct control, and they'll be much more pushy. So you'll be much more likely to have that with the VC firm. But angels in general, no.
And also just on the topic of change, just I know the world of finance is kind of changing these days, but cryptocurrency is becoming far more popular. Are you trying to develop strategies for cryptocurrencies, or is that something you're like ignoring because you don't think you can quantify it as easily here?
So we have automation set up now. As I said, they launched yesterday. So right now we have a dollar cost averaging app set up, which is pretty cool. So you connect whatever exchange you have, FTX, KuCoin, Coinbase, whatever the heck. Choose your coin, choose the frequency, choose the amount, and click set up the DCA. And it's like free. We give you a free DCA when you join, and it just does that in your account every month or every week, so you don't have to even think about it, right? And that's like our idea of this long-term crypto investing, because DCA is a great long-term strategy. But no, we do plan on having crypto strategies for sure, and the guys are working on it. Like this, Connor's working on this stuff right now. They are harder to they're less long-term. The data isn't there. Like there's not as much long-term data. We easily need another like 5 years to have any sort of reliable data, probably more. But you do see weird and different things in crypto. I mean, in Connor's research, he found that the best thing that he could find as a predictor of crypto returns is how much that coin is searched, is Google searched. So you're using alternate stuff there. You're using alternate data sets there rather than sort of more classic ones. But yeah, we do plan on adding much more. Probably more so, like more categories as well are very good. So let's say you're really into DeFi. Maybe there's a collection of like 3 to 5 coins. You could just invest in that, like an ETF, and again, we have that in the next week or so. Just like investing like 5 coins, just equal weighted, and just like auto DCA into those. So that's a nice long-term way as well.
And you yourself, I know you have a lot of experience in the industry. Do you invest in cryptos, or would you recommend it, or what would you say?
So the team are mad into it. I'm a skeptic, I must say. I absolutely believe in the long term of blockchain's amazing, and I do see the long term of crypto for sure. I would definitely, for me, it's either Bitcoin and Ethereum or like nothing. For me, all these other coins are so gambly. From my personal perspective, and certainly then you get into the world of NFTs, and once again I can totally see the long-term things of NFTs. Awesome, get my house on an NFT down the road so I can see all the history of my house and who all the previous owners were. Get my camper van on an NFT, I can totally see the usability. Big buzzword. It's like Charlie Munger talks about, when everybody is greedy, be fearful, and when everybody is fearful, be greedy. And then beyond that, you have this whole metaverse word that's being thrown about, and it's like this even layer on top of NFTs. It's like, yes, there is, absolutely, it's going to happen, but like not for a long time, I don't think, and it's just a lot of hype. So yeah, I'm skeptical, but I do believe in the long term of all of those things, but just not to the same extent that other people do.
Perfect. Yeah. So, and then in kind of moving on from that, and kind of, I suppose, from our perspective, maybe think back to your time in UCD. What kind of CS background did you have? Obviously, you did computer science, but what kind of skills did you build up in college that probably you thought were valuable long term? And maybe, I don't know, what skills were completely useless that you built up in college? It's kind of the flip side of that.
The best thing that I ever did in comp sci was my 4th year final year project, which for me was building an Android mobile app. Now I'm mad into backcountry skiing, so for me this was a backcountry skiing app, and for me, by the time 3rd year ended, I hated computer science. I did an exchange in Vancouver in UBC, had an amazing time over there. Mostly climbed and mostly skied, and did a tiny bit of CS, managed to scrape by. The guys I was competing against there were some of the smartest people I've ever met in my life. So I was sort of mentally scarred from the level of comp sci over there. Came back and I was like, I'm just going to become mountain man for the rest of my life. And then, yeah, really the FYP for me was great. Like having this little side project that I could work on and teach myself the skills. I learned more doing that little side project, that app, than I did in the entire 4 years of my computer science degree. And I think that's the wonderful thing with the internet now, is you really have this opportunity to teach yourself anything. And truly, I think college is a place to learn how to learn, but like you do most of your learning outside of college. So in the first 6 months of whatever job you get first when you leave college, you're going to learn just a whopping amount, and it's going to be like, whoa, how is what I did in college kind of relevant? But it's like tacking on. College class gives you a base level skill of like lots of different things, so that you might be prepared in some aspect in a certain job to be ready. But and then the FPP was great. Basically what I'm saying is go do it a little side project, little piece of coding on the side, be it playing around with Quant Connect, or be it like from the quanti side of things, going around creating your own little algos, because they're fun and you learn so much. Or it could be building an app or something like that, and you learn a lot.
Yeah, you kind of talked about the first 3 years in work there and stuff. So I don't know if you ever worked like in a big office or with a big company ever before, or you went right into just doing your own thing. Do you recommend people work for big companies, like long established companies, before going into entrepreneurialism, or is it something you can go right into?
So I went through layers. So I went in and worked in big tech straight away when I left college. I was very lucky to get a job in Workday. I think I did pretty well in university. So Workday, I worked on the accounting side of things there. Makes sense. And so that was a big tech job as a software developer. That was super cushy, you know, all the Xboxes and PlayStations and table tennis tables and food plans you could eat and all sorts of fun stuff, and not a whole lot of work. It was pretty laid back. And I went from there, when I was there, built a camper van, quit the job, then worked like freelance for a couple startups as lead project manager and also lead developer for 2 different guys, and then finally started doing my own things. So I went through actually all 3 different layers, and it's a really hard question to answer, is like, what's better, going straight into a startup or going into a big tech company? It's a very, very tough one. Look, a big tech company is probably going to pay you better, and it's going to be a lot less stressful. And it's kind of like golden handcuffs, because depending on what the company is, you're going to be getting stock options in the company, and you're going to be being paid an amazing check. So it's kind of hard to leave. I was interviewed by a PhD student, a Singapore guy, a great dude, but he was trying to figure out like why so few people in Ireland leave big tech to start their own company. He found me and like a couple other guys who had done it. Because it's really hard to leave these big tech companies because of how well you're treated. It's very addictive, like, and so, yeah, I suppose it really depends then, you know, you're not going into a startup really for money, and really, like, you know, in the early years, it should always be learning over earning, I think, no matter what you do. So if you are looking, if the big tech company you're going into, you're going to be doing some crappy programming language and not learning much, and you compare that to a startup where you're going to be learning a tremendous amount, go for the startup every day of the week. If you're going to be working a crappy role in a startup, or you learn a huge amount in the big tech company, go for the big tech company. It's a hard answer, but I think it's always going to be learning over earning your first couple of years to get those skills that then you can choose to do whatever the next step is that you think is best.
Yeah, just on that, I know it definitely, obviously, as you say, depends on the firm. But would you think on average, just on a base case, you would learn more working in a big company with people like experienced in it, or on your own, where like it's kind of like swim or sink kind of thing?
Okay, you learn different things. In a big tech company, you're going to learn lots about agile, and you're going to learn lots about best practices and about testing and about QA testing and about doing things right. And it's going to be very slow. In a startup, you're not going to be doing as many best practices, but you're going to, in my opinion, learn a lot more. Yeah, about just getting stuff done. You're just going to be doing so many different things that you are going to learn a whopping amount. And it might be, you know, at the detriment of some structure, but that, yeah, I mean, for me, it's definitely startup. You're going to learn a lot more.
And do you think if Aikido like takes off and becomes really big, do you think you would stay with it, or are you kind of addicted to that kind of like fast pace, fast learning lifestyle, and you just start another company and keep on going?
You're asking for me, pardon me, if Aikido takes off, would I jump ship and move to another tiny startup?
Well, do you enjoy the startup life more? Would you think of selling, or would you think of staying in this one company for the rest of your life?
Okay, so no, my goal with Aikido is not to retire at the age of 65, having run it for like 40 years. That is absolutely not my plan. Ideally, you're looking at an exit strategy for when you're running a startup, right? So you're looking at like a 7-year kind of time horizon when you start a startup. And look, it depends. There's some people who are very happy to go all the way to IPO and beyond, and that's a certain type of person. But I think for most founders, I wouldn't be on my own there. Is like you're taking on more work. You're doing something and you're trying to make it as fun as you possibly can, and you're doing something you're passionate about, but ultimately you're doing this for a reason. Like, I'm taking a big risk. I pay myself pennies compared to what I was earning when I was years younger than I am now. And I'm not doing that for no reason. Like, I'm doing that for a payoff down the road. But you have to make sure that, like I told you, I'm big into meditation and like Buddhism, and a lot of that is living in the moment, and you don't want some future payoff. Like, you're not starting a startup just because you want to sell it for 20 million. You're starting it because you also do love it. So it's like it's kind of like both. But no, so let's say I was successful, very, very successful with Aikido, managed to sell it for a bunch. Would I go in and start another startup? I was having this conversation with a buddy yesterday, and I think the answer is yeah, I would. I still keep living life like I, and doing lots of fun stuff, but I think I would. But I might not raise money from investors again. I might do, like I was talking about, it's just a little side hustle. Like I probably have a list of 60 business ideas now in a document and I've ordered them all into like what I think would be the most successful and ones I would find the funnest up the top. And so they're kind of just sitting there waiting to be jumped on. I doubt I'd raise money for them, but it's too hard to say. I'm still young and Aikido is still young, so it's kind of hard to know.
When you were pitching initially for funding, is there, looking back on like kind of when you were beginning, is there any advice you would have loved to have had before that kind of first pitch?
Yeah, that it's going to take a lot of pitches for it to work. So we probably pitched to 50 investors, I would say easily, and that's in getting in front of maybe 50 investors, and then you're going to have to send messages to 500 investors because you might only get a 10% reply rate there as well. So I think it's important to not be disheartened when that happens. I would say give it your all and don't just concentrate on that one thing. Don't stretch it out too long. Try and set a deadline, a date that you want to finish the fund round, and really aim to get it closed. It's Parkinson's law. Work expands to the time that you allot it. So if you give something a timeline, you're much more likely to finish in that timeline. Try to get it done in a few months. Don't stretch it out over a year. And lastly, be really careful who you trust. There's a lot of very untrustworthy people out there. One guy, we were very young and naive, and it was right at the beginning of our fundraising, like we hadn't actually raised anything, and he was this close family friend, not of my family but of my co-founders, and this guy's like, oh, we'll get you, he helps startups raise, and he's like, oh, we'll get you guys funding now. I know this family and this family and this family and this family, and I know they're ripe now. They'll definitely come in and invest. And we're like, all right, sure, well, okay, that's great. When can we expect to hear back from you? And he said, look, we'll be back now next week. And this whole thing of we'll be back next week and we'll sort it out, oh, you'll definitely get this, went on for months, literally months, and we didn't do anything because we were waiting for this guy to come through. He never came through. He was a complete he could have destroyed us, really, and because he was very untrustworthy. So don't put too much trust on anybody, because at the end of the day, unfortunately, there's a lot of people who are they just think they're his business. And then when you start getting some funding in, be careful of what investors you allow in. I raised $1 million all virtually, and the one time that an investor wanted to meet with me, I went and took a train up to Barcelona, and turned out that he wanted to launder money through my company. He wanted to invest 350K and give it to me in a briefcase. And this was the second time this had happened. So you'll start to see there's this also criminal side of startup investing that is really crazy as well. There's a lot of dirty money out there that needs to be washed. So be careful who you trust on both sides.
And then just when you're actually pitching as well, is there anything that you would have liked to have known for the pitch itself?
Yeah. So so generally a slide deck for a pre-seed company or a seed company is going to be you're looking for around the 10 slide deck. Startups will initially they'll put loads of slides in, there'll be 20, and you realize that less is more. And what you actually find, the more experience you get, and as you come towards the end of your round, is that you're just having less and less in your slides. There's less text, there's less slides, and much more of it is the chat with the investor. Because honestly, what the investor cares about, sure, the company's kind of cool. They care about you. They want to know that you are very trustworthy, and they want to feel like you're really authentic. So really don't be afraid to, have a little bit of fun with them, have a little bit of a laugh with them. I found great. I really tried to be, I turned the charisma knob up to 120% and really went for it. I was exhausted. Sometimes I was doing so many pitches each day that I'd be on and off and on and off. It was quite exhausting, but it was very important to really develop that relationship. And what I found was half of it was doing the pitch deck, But I'd even before that go into a little bit of the story. It's like I'd tell them a little bit of a story before I went into the pitch about, you know, what's the history of this. You know, me and Connor, you like started building our own back tester, and then we went to some talk, and then we went to an Eddie Rockets, sat down for 6 hours, fleshed out the whole business plan, and so Aikido was born. And this kind of thing kind of warms them up. So I'd say get really personal with the investor and make them really like you, because they're investing in you really far more than they're investing in the startup.
At the beginning, when you're taking more people onto your team, like would you have gone through a kind of interview process like they would in bigger companies, or what was kind of your thought process there? Because obviously those people are so important.
Yeah, people are so important, especially in a startup. I think the general rule of thumb is only hire people that are smarter than you, only hire people that are better than you. So, I mean, how all these Silicon Valley startups basically start is that it's a startup of friends. It's literally, they just know a bunch of brilliant people, and so they form a company with them. We had 4 guys, you know, myself, my co-founder, we got 2 really smart guys that we really trusted on board. And it's been exactly the same with everybody that we have now. It's all been people we already knew and people that we trusted. We're now finally at the stage where it's still team fit is everything for me, but like we're going outside of friend group because we're starting to get to hires that we don't really have that much of a network with. They'd say, you know, I wouldn't do a coding questionnaire really. I mean, maybe now I'm hiring like a full stack engineer with a very big tint on towards back end development. So maybe there, because it's an unknown dev now, finally we might do a coding test, but it's a lot of interpersonal and how the team fit is.
Perfect. Yeah, I think, well, that's all the questions I had anyway. If anyone else kind of on the call has anything, you can speak up or stick it in the chat. But otherwise, thanks, Shane. I hope everyone else felt the same as me. I thought that was a very interesting talk, and it's something that I'd be quite interested in anyway. So thanks a mil, and I hope you enjoyed it.
Yeah, Conor, that was a lot of fun. It's just nice having a chat, isn't it? On my own, the camper van.
Yeah, a bit of, yeah, exactly. Yeah, a bit of socializing.
I have a question to do with your camper van, to be honest. How do you get Wi-Fi?
Hotspot on my phone.
Just a hotspot, so you have to
I pay €35 a month for Vodafone, and I get unlimited internet calls and texts, and EU-wide. I mean, I was in 20 countries last year, and even in like Norway and Switzerland, which are outside the EU, and they all have agreements. So
yeah, but I mean, your stream is pretty clear, so obviously you have good service there. Do you ever run into situations where you can't?
Well, tomorrow now,
take a call?
and actually this might be of interest to you guys. Tomorrow we have so I run the algorithmic trading and quantitative investing meetup group. It's like one of the biggest in the world now. It has like 700 members. But tomorrow we're running a meetup, and there's like 240 people coming or something like that. But it's a virtual one, so I'm kind of a little bit nervous for that. Sometimes it can be patchy here. What I noticed, this is getting way off topic, but like I have these to cover the windows, I have this tinfoily stuff to keep me warm because it's so freezing out there. But if I put those on the window, because I'm in this tin can, the signal actually gets reflected back, and I have dreadful reception. So I take those off when I'm on the meetings. But tomorrow's such a big one that actually I've booked I'm in this co-work that I normally go to during the day to work, and I've just booked a meeting room there for the thing. But let me should invite you guys. I think it could be of interest if you fancy coming. Connor, our quant, is basically an introduction to software engineering for algo trading and quant investing. So now it is oversubscribed, so if you can't get in, just keep clicking join, but it should be interesting, I think.
And those co-working spaces, most of the places that you go to, do they have a co-working space? The towns?
Yes, depends how big it is, but yeah, for sure. Most will have at least one, but most of them have several. I mean, last year I was in 3 co-works and 2 co-livings, So that's where you live and work with people. So I was in one in Palma in Mallorca, and then one in the Arctic Circle in Norway. And you kind of live with these people, and it's pretty cool because they're like normally pretty entrepreneurial type folk, who also have interesting side passions. Like in the Arctic Circle, these were Arctic surfers, and it was really cool. So there's snow everywhere, but we go out surfing, and you have like your 9mm wetsuit on, and then you go back, and then you're like chatting about your startup and all sorts of stuff. So it's
Is that a Lofoten, was it?
yeah. How'd you know that?
I just know my stuff.
You know your stuff. Yeah, that was the coolest co-living I've been in. That was
I really, really want to get up there. It looks class for skiing and surfing.
Yeah,
exactly. Freezing cold.
You know what? Norway isn't actually as cold as Sweden. When we drove through Sweden now, it was a crazy. Lapland was so freezing. I drove through this place called Kiruna, which was like it's minus 30 degrees. And my friend James, he's living there now over the winter, and he's like minus 40. It's properly. I was
there. I was actually in Sweden skiing over the winter there in Åre.
Yeah, like nice.
Minus 25 one of the days.
Yeah. It's chilly for sure. I take the Alps now, I have to say. It's a little bit. Sweden's quite flat, but it is beautiful. Like there's a guy in the campsite here with. I last year I was moving around all the time, but this year I'm in a campsite. I just was properly sick of moving constantly. But there's a really hardy Swedish guy. He's retired. The guy's in his 60s, and he's been living in this camper van for 3 years during the winters here. And he just goes out climbing and skiing. I love it. Like it's super cool. The Swedish folk they're tough people.
Sorry, I'm going very off topic here.
Yeah, it's that's what I say, because I raised all the funds when I was in the camper. Again, investors love that. Don't be too serious if you're pitching. Like, just keep it light. I'd be showing them around, get them a little bit of a tour before, get them laughing so that they're nice and warmed up. And I think you'd find that not only, for me, it's B2C and subscription. I don't have to do very much sales. But if I was B2B and I was doing sales, I just do the exact same thing. Sales and startup, getting funding is like the exact same. If you're doing a sales pitch, warm them up for sure. Keep it light.
Yeah, perfect. I think that's pretty much everything. Thanks, Emil, for coming to speak to us.
I think I'm doing a talk with. Who am I doing a talk with? You can tell me. There was another UCD one that reached out to me, and then you guys. Who is that with?
INE, Investors and Entrepreneurs.
Yeah. That should be a good one as well. You're in that one, Saoirse, as well, are you?
No, I just there's overlap with our committees, so we kind of know what's going on. Yeah. They're excited for that one.
Yeah. That should be. Obviously, there's a lot of they're the two perfect societies. Like Datastock and INE is perfect.
Perfect.
I'm giving another one. I keep getting reached out to like. Lots of universities are reaching out to me at the moment. I got reached out to by Harvard earlier on today, which is kind of cool. The Harvard Business Society, and then also it's another one like University of Delaware. But the thing is, with all the United States talks, they're at weird times, so I'll try and make it work. Anyway, guys, it's lovely to meet you all. And if you ever have any questions about, I can't give investing advice, but about investing, but more so probably startups, because that's a little bit funner. But if you're ever interested in, doing your own and you're looking for a little bit of help, I'm obviously I'm there, and I'm really happy to help any of you guys out wherever I can. So, and my email is shane@aikido.finance. Careful sending that one out, actually. Might cut it off. Well, no, fuck it. It's all right. But I'm happy to help with the with anything startup related. Just give me a bell.
Perfect. Yeah. Thanks, Emil.
Thank you.
Cheers.